Hello and welcome to Calmvestor podcast. I am Ethan. Join me on this journey to build solid financial thinking and take control of your financial future. We all know life is unpredictable. We make plans, build careers, and cherish our families, but unexpected events can happen. Have you ever thought about that? Imagine a friend, the main provider for their family, suddenly facing a serious accident or illness. Their life and their family's life would change in an instant. How would they cope financially? Medical costs are rising, and the risk of unforeseen events is a reality for everyone. It is a sobering thought, isn't it? So let me ask you, if your family's primary source of income suddenly vanished tomorrow, what would happen to your loved ones? Do you have a financial lifesaver in place for such a scenario? Today, we are going to explore whether life insurance is truly the financial lifesaver many believe it to be, or if that is just a common perception. We often plan for everything, except for the uninvited risks. So what exactly is life insurance? Simply put, it is a contract between you and an insurance company. You agree to pay a regular fee, called a premium. In return, the insurance company commits to paying a sum of money to your designated beneficiaries if a specific insured event occurs, such as death, disability, or critical illness. The core purpose of life insurance is financial protection for your dependents if you, as a key provider, are no longer able to support them. It is not primarily an investment for quick profits. It works on the principle of pooling of risk. Many people contribute to a common fund, and this fund is used to compensate the few who unfortunately experience a loss. It is a way of sharing risk within a community. It is important to distinguish life insurance from health insurance or savings accounts. Health insurance covers medical bills, while savings are for accumulation. Life insurance focuses on protecting against major long-term risks to life and income. Who really needs life insurance? Typically, it is for those who have financial responsibilities towards others. This includes parents with young children, individuals with significant debts like a mortgage, or anyone wanting to ensure a secure retirement fund for their spouse. As someone wisely said, life insurance is not bought because someone will pass away, but because their loved ones need to continue living. Think about a family where one parent is the main earner. Life insurance ensures that if something happens, the family has financial support. Despite its importance, many people are hesitant about life insurance due to common misunderstandings and negative experiences. Let's address some of these. A common myth is, life insurance is a scam. It is easy to pay premiums, but hard to get a payout. This often stems from misunderstanding policy terms or, unfortunately, past negative experiences. Another belief is, buying life insurance is inviting bad luck or is throwing money away if nothing happens. This views insurance as an expense rather than protection, like carrying an umbrella hoping it doesn't rain. Some also say, life insurance returns are lower than bank deposits or other investments. This is a flawed comparison, because their primary purposes are different. Life insurance is for protection, not high returns. Negative experiences also contribute. Some have dealt with unprofessional agents who missold policies or didn't tailor advice to actual needs. This can lead to frustration and distrust. Contracts can be complex, filled with jargon that is not always clearly explained. And sometimes, the claims process can seem cumbersome, often due to incomplete understanding or documentation. There are psychological barriers too. People are often uncomfortable discussing risks, illness, or death. And many younger, healthy individuals think, I am young and healthy. I do not need it yet. As Mark Twain supposedly said, it ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. This applies perfectly to misconceptions about life insurance. So why do these problems and misunderstandings persist? A primary reason is a general lack of personal financial literacy. Many people are not equipped with enough knowledge about financial products. The quality of financial advisors can also be inconsistent. Sales pressure might lead some advisors to focus on selling policies rather than providing advice that truly fits the client's needs. Information asymmetry is another factor. Insurance companies and advisors naturally have more information than clients. If not communicated transparently, this can lead to misunderstandings. Communication about life insurance can sometimes be too complex or may overemphasize investment benefits instead of its core protective value. This can create incorrect expectations. And, as mentioned, clients sometimes have mistaken expectations, viewing life insurance as a high-yield, short-term investment rather than a tool for risk protection. This sets them up for disappointment. Investing in knowledge pays the best interest, as Benjamin Franklin said. The importance of understanding what you are buying cannot be overstated. So how can you navigate this and make smart choices? First, clearly define your needs. Before buying, ask yourself, why do I need life insurance? Who am I protecting? How much coverage is necessary? Assess your protection needs. Who depends on you financially? What are your family's monthly living expenses? Do you have outstanding debts? A general guideline is coverage of 10 to 15 times your annual income, but this varies based on your situation. Determine your financial capacity. Premiums should ideally be around 10 to 15% of your monthly or annual income to ensure you can maintain the policy long-term without strain. Learn about basic product types. Term life insurance offers pure protection for a specific period and usually has lower premiums. Whole life or endowment policies combine protection with a savings component. Investment-linked policies offer protection plus investment opportunities. Each has pros and cons. A goal without a plan is just a wish. Defining your insurance needs is part of your overall financial plan. Do not buy out of obligation. Buy because you understand and genuinely need it. Next, choose your insurance company and advisor wisely. The company's reputation and the advisor's professionalism and dedication are key. Look for established companies with strong financial standing, good customer service, and transparent claims processes. For advisors, ensure they are certified, knowledgeable, listen to your needs, explain clearly, and prioritize your interests over commissions. It is a good idea to meet with at least 2 or 3 advisors from different companies to compare. Ask for detailed illustrations and explanations of all terms, especially exclusions. Quality is never an accident. It is always the result of intelligent effort. This applies to carefully selecting your insurance provider and advisor. Finally, read your contract thoroughly and manage it effectively. The policy is a legal document, so understanding it before signing and keeping it active is crucial. Most places offer a free look or cooling off period, often around 21 days after you receive the policy. Use this time to read every detail. If anything is unclear or different from what was discussed, ask for clarification, or you can cancel the policy and get your premium back. Pay close attention to benefits, policy term, premium payment term, exclusions, and the claims process. Always provide truthful and accurate information when applying. Ensure you pay premiums on time and keep your policy documents safe. Periodically review your coverage, perhaps every few years or when major life changes occur, to ensure it still meets your needs. Being careful is the parent of safety. Taking the time to understand your policy can save a lot of trouble later on. It is about being proactive for your peace of mind. In conclusion, life insurance is not a universal solution for all financial problems. However, when understood and chosen correctly, it is an invaluable lifesaver when life's storms hit, helping you and your family stay afloat. It might not make you richer, but it ensures that the people you love will not face financial hardship if you are no longer there to provide for them. It is about securing their dreams and future. Choosing to get life insurance is an act of love and responsibility. It is about providing peace of mind for yourself and financial security for those who depend on you. Do not let lack of knowledge or negative hearsay prevent you from exploring a tool that can offer genuine peace of mind. The best way to predict the future is to create it by taking proactive steps. Consider making learning about life insurance a part of your personal financial planning. Take the initiative, ask questions, and make informed decisions. Perhaps dedicate an hour this week to research a concept or product you are curious about. If you have financial dependents, try to estimate how much your family would need to maintain their lifestyle for at least a year if your income was gone. This can be a powerful motivator to plan. Remember, the financial lifesaver is most effective when you have it ready on your ship before the sea gets rough. Life insurance is that preparation for life's journey. Thanks for listening. If you found this content valuable, do not forget to hit like and subscribe to the channel. See you in the next episode. Have an amazing day filled with positive energy.